All right, welcome back to another episode of the Black Bullion Show. All right. I can't tell a lie. I bought some more silver, man. But hey, can you blame me? I mean, the prices moved this morning to a point where I just had to pounce. And you know my saying, when I see red, I spend my bread. So gold and silver pretty much have been trending down all morning and hit a severe drop around 7 a.m. to 8 a.m. Eastern Standard Time. We also got some economic data today that helped to keep the prices down a bit. But guys, I don't know about you, but the major stock indices are extremely slow moving and a bit flat in recent days. We'll talk about why I think fortune will actually return back to gold and silver and why we are at the beginning of a sea change. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so we are starting off a little bit differently today with an article from CNBC entitled, "Don't Get Too Optimistic. Cramer Says Wall Street Records Don't Reflect Main Street Struggles." So let's see what exactly he's talking about here. And I quote, CNBC's Jim Cramer said Thursday that there is more pain in the U.S. economy than what is reflected in the stock market's robust recovery from the Ronnie's era lows. I'm thinking, wait a second, don't get too optimistic. I think it's our nature to be optimistic, Cramer said on Squawk on the Street. He then continues, we like the fact that the market is going higher because our viewers own stocks, but right now we seem gassed. Cramer's comments follow initial jobless claims for last week checking in at 1.106 million, higher than economists had expected, and marked an increase from the prior week's total of 971,000, which was the first time in 21 weeks that initial claims were under 1 million. He then says again, are these numbers worrisome? Well, yes, if you don't get a stimulus package, and yes, if you don't get a shot, let's say. Cramer said on Squawk Box, I think be prepared for more of these numbers. The stock market has experienced a sharp rebound from its issue-induced sell-off, with the S&P 500 on Wednesday notching another intraday high, and some corporate giants such as Target have reported strong quarterly earnings, but neither paint an accurate picture of what is happening in the economy, particularly with small businesses, said Cramer, owner of a Brooklyn, New York restaurant, which I actually found to be pretty interesting. I had no idea he had skin in the game with small business, so that's actually pretty interesting. He then says, I think this is the two economies. The V-shaped recovery in stocks is not the V-shaped recovery in the economy, the Mad Money host said. You may be joyous about Target and terrific numbers that we got from Lowe's, but this is the real world. Real world, not so hot. So mainstream media is finally telling their viewers to be cautious in this environment. Cramer mentioned an interesting fact that most of their viewers own stocks. But guys, actually take a look at this. Since 1998, we've actually been trending down in stock ownership in the United States. Now, what I find really interesting about this graph here is that the time range and trajectory is similar to that of the velocity of currency in the US, because in the velocity of currency in the US, it peaked in 1998 and has been trending downward since then. It just seems like people don't want to circulate their cash that much while we accumulate more and more debt, and while we have more and more inflation, monetary inflation, and so on. So let's take a look at the US 10-year Treasury note. Now, remember how I said that at the beginning, that we're at the beginning of a sea change? Well, the 10-year yield continues to trend downward today, putting a halt on the temporary risk-on environment that we were living in. In fact, this sea change is so powerful that the good economic news that we got around 9:45 a.m., it wasn't enough to keep that peak that you see here afloat, and it actually dropped down a bit. You know, the interesting thing is that we got as low as 6.24% today in the yield. So we're just continuing to trend downward with the yield. Now, let's talk about some of that economic data that I just mentioned that we got. Now, around 9:45 a.m., we got manufacturing and services PMI data for August, and they both rose sharply. Now, for gold and silver, this put a minor stop in their rise, but then they bounced back right after. So let's take a look at gold and silver to see the overall look for today. Now, gold and silver are trying to essentially dust their shoulders off a little bit here. They had a rough morning, but it wasn't because of the 10-year. We'll get into why shortly. But guys, remember when I said that I actually bought some silver today? It was actually right around this time, right before the immediate lows at 10 a.m. So I didn't catch that immediate low, but we're bouncing back a bit. And again, like I said, we're at the beginning of a sea change. You know, I do think prices are going to go up soon. Now, the interesting thing about this is that what has caused this to trend down so much and this to trend down so much is this. The US dollar. Now, you guys probably might have guessed this, but it's basically been gaining in strength today since 1:30 a.m. Eastern Standard Time. Now, if you recall, there was a time when the 10-year yield was high and the dollar was low. Remember, the dollar got down to the 92s, like low to mid 92s. It got that low. Now it's been gaining strength. It's at the low to mid 93s. And things have essentially reversed. 10-year yield is now lower while the dollar is rising higher. So you may be asking, well, why is this happening? Well, in this sea change that I mentioned, we're feeling more risk off and we're playing the waiting game. So when you play the waiting game, cash is king and optionality is key. So people are building up their cash reserves and playing it safe. Unfortunately, that means gold and silver prices are lower. And fortunately, that means we can get them at a discount like I did today, because I can't help myself. Now, this is important, guys. I believe the sea change will lead us into a space of more uncertainty. I do think gold and silver will go higher because of this. The wind is essentially going to be in our sails very soon. So guys, get ready. But everyone, that was your Friday. Let me know what you what you guys thought about what's happening in the market. We have 2 more episodes today, so definitely hit that subscribe button to stay tuned for them. And also please hit that like button to get this economic evangelism right on out there to the masses. All right, guys. Thanks again for watching. Have a good one. It's Black Bullion.